Hey everyone, Michael Manatskanyan here with the Wealth Through Real Estate School Community, a community designed for buyers, lenders, capital raisers, and connectors. Anything pretty much involved with the buying and holding, fix and flipping, lending, renting of real estate investments. We do also love our wholesaler friends and people who are finding deals. You're always welcome to this community. Come help out, bring deals that you want people to help you with or be your end buyer for. So come on in. In the school community, it's got easy access to all the creative finance tools and traditional finance tools and resources that I offer. We have detailed deal analysis, whether you're traditional, creative, whatever type of deals you're acquiring, or if you're raising capital for your investments or you want to lend, detailed trainings for you to take part in. And so with that quick intro, remember, I can be found on YouTube as the Intentional Investor. So just at Intentional Investor. And then on Instagram is the best way to stay connected, which is at Michael M. Nat. And I'll drop all those links at the bottom of this video as well for anyone who's interested in connecting further. And if you want to be part of these live calls, definitely join the free school community, Wealth Through Real Estate, which will be linked below. So you can be part of this and get the free question and answer, underwriting, whatever you want during our live weekly calls. So with that being said, at the end of each month, we have winners within our school community, and the winners get some awesome prizes. Because I was out in Montana for a few weeks hanging out with the family, doing thousands of miles road trip in an RV with a newborn. Lesson learned. It was great, but lesson learned. Wait till she's a little older to do something like that again. With that being said, it took a little bit of a delay to announce the winners, but I still was able to track who are the winners for the month of August. So actually, we have a few of the winners in here right now. We have Nadine, who gets 3 months of access to the paid intentional investor community. Nadine, do you want to unmute yourself for a second and just give a quick intro about who you are and what you got going on? No pressure, by the way.
Hi, everyone. I'm Nadine. I'm based out of Seattle, Washington. I am in Sub 2 in Owners Club with Michael. And my team and I are looking to acquire properties in Georgia, North Carolina, and Tennessee, basically for co-living, with a focus on active seniors. That's what I've got going on. And I love this community because Michael gives so much value. And I like the way he communicates the information.
Thank you. I appreciate that. I've always thought of myself as the person who takes these things that are supposed to be complicated. I think they're intentionally made to sound more complicated than they are, and then make it easy enough for anyone to basically leverage and get what they want out of it, right? And we all want some form of passive income, wealth, and I think intentionally they make the language and the way to do this stuff harder than it needs to be. And I try to break those barriers so that everyone can achieve financial freedom who's willing to put in the work, right? It doesn't just happen. So you all are putting in the work, which is the most important part. Thank you.
Absolutely. You make everything digestible, and your underwriting is top notch.
I appreciate it. I think it's the foundation for anything investing. So underwriting is
Agree.
above and beyond, and the most important thing. Our next winner in second place was Ronnie, who was I believe our first place winner last month, and she gets lifetime access to the Ultimate Creative Finance Calculator. It's a freaking amazing calculator that I built and used for every single transaction that I bought. If you're not aware, I own 50 plus rentals in 10 different markets, worth over $15 million. We're creeping up on just around $20 million of real estate, probably by the end of this month, or at least by the end of October. So it's just the tool that I use when I'm buying, lending, raising capital. It's my all-in-one tool that you all can benefit from. There is a free version that you get access to, and there's also the paid one as well. You choose what's best for you. Our man Richie right here, who's also in here, he's third place winner, so he gets a consultation. We can utilize that for, you want help defining kind of where you're at, what your plan should be based on, where you're currently at, or you want deal analysis or literally anything. It's 30 minutes that you could just choose whenever you want to talk about whatever. I'm here for you. So just let me know when you want to schedule it. Do you want to give a quick intro, Richie, about who you are and kind of what you got going on?
Yeah, sure. My internet. Can you guys hear me?
We can hear you a little bit. Yeah, go for it.
Can you guys hear me?
Yes.
Okay, perfect. Yeah, I'm in Joshua Tree right now in my property. I'm having a project right now here. We're building a hot tub, so pretty exciting. And I have one property right now on Airbnb, so I'm looking to, trying to maximize my profit and learn how to manage the business. That way I could scale and hopefully can, buy another property or um, you know, eh, I'm also trying to learn how to co-host like property management, that kind of stuff. So, um, yeah, any knowledge you can share. I'm definitely just observing and wanted to I'm eager to learn.
Excellent. Thank you for that. And I'll give you a heads up right now. During our one-on-one, please don't bring up property management. It's my least favorite part of all of this. I outsource it as much as possible. I love finding deals, working with sellers, agents, whoever, finding the deals, underwriting and analyzing them, determining, what the returns are. Can we raise capital, raising the capital, and then getting to the buying. The managing and setting up properties and all that, there are so many better people out there than me who love that side of the business. I'm on the front end as much as possible. And then if you want to scale using your money or other people's money, whatever, those would be perfect things for us to talk about. So yeah, thank you for that intro. I appreciate it.
Thank you.
All right. So, and then last is going to be Anita. I don't see her in here, I don't believe, but she gets a free trial to PropStream, which is a tool that I use when I am both looking for deals, potential creative finance opportunities, or even for fix and flip opportunities where I'm looking for, what's a good candidate for seller finance, or maybe a good subject to deal on or off market, as well as, I use it every time I underwrite as well to get some of the preliminary info. It's, like any tool, it's not always 100% accurate, but it's the best tool that I utilize to provide the information I need on mortgage information or, the owner's info or, quick comps, rental income, that kind of stuff as well. So it's a tool that I use all the time. And so you get that free trial for there. So just link up with me and I'll get it for you. All right. Thank you to our school winners. And remember, school winner, the way school, like I don't select the school winners. You guys select it by what you do. The more you engage with each other, the more you post, comment, like, all that good stuff, and people interact with your posts. Typically, the more value add, the more engagement you get, the higher your school rating is. And then at the end of each month, we just take the top 4 winners and you win the prizes for that month. So let's wrap it up with the school winners. And so major life announcement. I mean, I did highlight it around 2 weeks ago, real briefly, but the official info is coming out, or like the official notice is coming out, I guess, or the email or post or whatever, however we're going to do it. But as of just 3 weeks ago was like the last day that I worked my W-2 and the last day I'll ever work for anyone else. If I'm working for anyone else, it's directly people like you all who I'm helping achieve financial freedom. I am so thankful for the journey my wife and I have had towards financial freedom, starting with, going all in on personal finance and always being really good at keeping our expenses low, driving our income up, and just investing a lot of that until we got into real estate. And, people who have been part of the journey know how hard I go and when I do something. And, within 2 years of my first investment, we were able to be financially free, not only just to cover our needs, but then also our needs and wants within that time period. 2 years after that, before at the age of 30, after giving birth, well, I didn't give birth. My wife did all that work. I can't take credit, but after the birth of my baby girl and achieving our financial freedom level 3, which is 2 times our wants and needs. So it's like we have extra reserves every month. We can invest it. We can go on more luxurious travels, whatever. I decided to pull the trigger, quit the W-2 when it just became more of a hassle than I thought was necessary, and just decided to quit that, spend more time with my family, more time on real estate, going all in on it. So you're going to see a lot of awesome things coming out from me in the near future. Really trying to be your all-in-one resource for capital, for deals, for analysis, all that good stuff. And go all in on real estate, and then just help other people on their journey to financial freedom, or to become what you'll hear about is the veteran investor, scaling real estate, helping real estate professionals scale their portfolios through more automated lead generation for opportunities to buy, becoming masters of deal analysis, capital raising, and just the operations overall for the deals, the capital, and then just maintaining your portfolio as you continue to scale it. So I'm really excited about this next journey. I will state, so the veteran investor is basically what I just talked about. It's for those people that have cash reserves and they they have cash reserves, and they have some real estate experience, helping them scale their portfolio, turning it from amateur hour, right, which is where a lot of us are and a lot of people stay at. Pretty much 95+% of small business owners are in that, they're, without them, the business doesn't work anymore. So my goal has been shifting out of that, not to be the bottleneck in my own businesses, and it's helping other people do the same. So that was what Veteran Investor will be. It'll be hand-holding, more information will come out, but it's really doing it together, hand-holding over 6 weeks to develop your entire business model, raise capital, joint venture together, whatever you need to scale your portfolio, I'm there to support. And there's a whole curriculum around it. That starts this coming Monday. We already have the people that will be starting with it. If you're interested in joining the waitlist because you think you're in a position in which you want to invest money to then learn these skill sets to be able to scale your portfolio without never having to use your own money again, or you need to improve your deal analysis, whatever, all that stuff, then just reach out to me. I'll put you on the waitlist for future iterations. I believe the next one will start sometime in the new year. I don't have a definitive plan to continue doing this or not, but it is something that I'm doing this first go around to see how it goes. With that being said, all the recordings from that will be going into my paid school community called Intentional Investor, which will officially start October 1st. And I'm telling you right now, I'm making a very bold promise. We will be the winner of the school games for October. It's going to be one of the top 10 communities in all of school by the time the month of October is done. I can guarantee you that. I trust me, I will make it happen. And I'm gonna need all your help to do it. So if you're in a position in which you're enjoying wealth through real estate and you want to be part of the intentional investor community, which includes more live calls, more Q&A, access to exclusive lists of deals that you can buy, especially if you're a buyer, if you're looking for lending opportunities, not just to lend with me, but to lend on other investments. A lot of my lenders know they don't get the highest returns that they could with someone else, but what they get is security and risk mitigation because we have proven operations and systems. If you're looking for, higher returns, 15, 20, 40+% returns, you want to be involved with those kinds of opportunities, that's the community that's going to be getting access to all that stuff. You're going to get access to, once you unlock certain levels, you'll get my paid creative finance calculator. You'll get access to that. And then you'll get all of the veteran investor training recordings and resources. You get all access to that in the intentional investor community. You'll get, I won't be doing it with you. You'll get access to all the information if you want to do it yourself and create that own scalable buy and hold business model. There's like a ton more that will be included in there. And if you know me at least a little bit, I tend to underpromise, overdeliver. First of all, that's how I keep people happy, right? It's easier to underpromise, overdeliver, and intentional investor is going to be the next version of that. Whether you're a lender, a buyer, capital raiser, connector, whatever you're trying to do, that's going to be the community to really push you to the next level with much more information and all of these trainings that you have to unlock in the wealth to real estate community. You get access to those immediately. So you get all the trainings, everything immediately, all the live recordings. So that will start October 1st. More information will come out for it. What I'm thinking is the pricing is going to be like $199, something like that, for the people that sign up before October 1st. Once we hit 10 members, we're going to increase the price by $25 to $50 a person until we get to $500 a month. The reason for that is my 1-hour consultations are $500 an hour. You're going to be getting all of those benefits at a way higher scale and way more involved for a price that's less than 1 hour of my time. Typically, people are paying for deal analysis or things like that. A few of you in this chat and this community have also, paid for the consultation. So if that's something you want to do, more information will be presented shortly. And the cheapest it'll ever be is at the very start. So you let me know now if that is something you want to be part of before prices go up, because I don't want it to be a community with hundreds of people. I think wealth to real estate's a great community for that. I don't want the paid intentional investor community to be hundreds of people. I want it to be small enough that every single person feels truly supported and gets the value that they're paying for, not just recordings, but my, access to what I'm doing with regards to personal finance, savings, real estate investing, whatever it is, since I kind of do it all. Let's keep it going. So Veteran Investor starts officially 9/16 next Monday. Intentional Investor starts October 1st. And then, so now it's your time. So we've got How much time do we got? We've got another 40, 45 minutes in which we can do Q&A, underwriting, whatever you all need from me. You let me know. I'm here to support you all. So please go for it. If anyone wants to unmute themselves, anything personal finance, financial freedom, you want to know more about my journey to financial freedom, you want to know about how I'm lending, or you have lending questions, connecting questions, whatever it is, this is your opportunity to go for it. Or specific to your business too. If you want to be transparent and need specific advice to your business, this is your time. So whatever you all want.
Hey, Michael, I have a deal that I don't know if that we could underwrite. It just came
Sure.
across my email. I'm okay sharing the address.
Okay. You have all the info that you might need to for us to underwrite it correctly?
Let me double check.
Okay. If not, from now on, if you guys don't have deals, I want people to ideally send them beforehand so we can filter through and make sure that we have the info. If not, I've got always plenty of deals that we're underwriting within our business that we can always go into. I don't have it like readily pulled up right now, but I'll bring a deal or two that we can always underwrite together as a backup option moving forward too. Because it seems like a lot of people here, whether you're, well, anyone who's a buyer, lender, whatever, wants to continue getting better and better at deal analysis and underwriting.
No, they didn't send me the mortgage statement.
You have the info you need.
I mean,
outside.
I have the PITI, I have the address, I have the entry fee, I have
We can do the
the
best.
interest rate.
Yeah, we can do the best that we can and just see how it goes. Is there anyone else who has questions before we get into deal analysis? All right, sick. Let's get into deal analysis. So I'm going to be looking this way then. So I got my bigger screen. Let me start with screen sharing.
Will you be posting the details and costs somewhere for the new groups?
Right. So for the intentional investor, yes, I'll be posting that in school by the end of this week. If not, yeah, by the end of this week, you'll see that. And then the veteran investor, yes, but we're kind of troubleshooting what that pricing is, because the idea for veteran investor is whatever money, like I have a guarantee for you guys in the veteran investor. If someone is really trying to scale their buy and hold business or their lending business or their capital raising business, any of those three or all of those three, the guarantee is that you will learn and effectively raise more money than it costs you to join the veteran investor. We'll call that a mentorship because it's very hand-holding. So the veteran investor mentorship, whatever you pay in to join, you are going to be able to raise more capital. You will raise more capital on your next investment or your next few investments than what it costs you to join. And if you don't, but you are consistently taking action, the checking off the checklist of actions you need to do to make those businesses successful. If you do that and literally in 1 year, you're not able to, I will give you the equivalent amount that you paid ownership in one of my assets. So you literally lose. No, it's essentially risk-free as long as you put in the work. So if you're not willing to put in the work, I don't even want you to join. If you filter yourself out, if you're not going to be willing to put in the work and really do this to help yourself and your family achieve financial freedom, not the right thing for you. Learn from someone else. That stuff frustrates me more than anything else. But if you will put in the work and you want to do this and you're very committed and you just need some more guidance, some more standardization, some process, some systems, support, you need the training, the curriculum, you need and the tools and resources, then this is the right fit for you. And if you put in the work and you still cannot make it happen, I will give you that much access to one of my properties. So that is the veteran investor. And then for the paid school community intentional investor, which will have the recordings, all the tools, resources, all that good stuff. That one is going to start off at $200 a month for the people that join before October 1st. So you have to let me know if you are willing, if you want to join for it by October 1st, and I will discount you. Once we have 10 people, it'll be $250 for the next 10 people, all the way up until 500, which will be the rate long-term moving forward. So if you join and sign up, you only ever pay the monthly rate that you paid at, that you signed up for. If you join later, then it will be a higher cost. And that's kind of what it is. And the resources, what you will get out of it are bar none the best for buying and holding real estate, raising capital, lending your capital, and I guess connecting. But you could learn a lot from connecting just through the real estate community as well. You don't really need to join something like that unless you want to. Cool. And I'll post that stuff.
And Michael, did you say it's $200 every month? And it's gonna be a fixed rate as a
Yeah,
member?
$200 a month, every month that you stay. And then if you decide to get out or whatever, or you decide not to sign up right away, whatever you sign up at, that's the same rate you will always pay. Does that help clarify? So if you sign up at
Yeah.
$200 a month,
Thank
it'll be $200 a month until you decide to get out. And then, if you, I don't even know why you would, but if you decide to get out, but if you join later, once the price is increased, then it's whatever the price is at that time is what you'll pay moving forward. I'll tell you this, it will never get cheaper because I really want to limit the amount of people that are in there at any one time because I want it to be maximum value. We'll have more Zooms and calls and all that good stuff, but I want everyone to have an opportunity to present their deal specifically for analysis, whether you're buying, lending, whatever. I want you to present investment opportunities or questions about your business or systems or whatever. I want it to actually tangibly benefit your business. And I don't think I can do that effectively if we have hundreds of people in there. Like, for example, we haven't even really marketed the Wealth through Real Estate school community, and we already have 300 members. We haven't even marketed it. And we have all my calculator and all these things, email lists that will now start getting invited to all these awesome things that we're doing. Does that help answer that question, Gary and Richie?
Yeah.
Well, then I had a
Yes,
follow-up.
thank you.
Yep, go for it, please.
How do I join now to be one of the first 10?
Hey, you'll be number one.
All right, thank you.
I got you. Okay. And if anyone else wants to, just message me for now. I don't have a form or a wait list yet, but I will when I make the posts. If you want to, just tell me. I got you. I got you covered. All right. So with all that being said, let's underwrite. Edgar, you got a deal? Or does someone else have another question before we start? I can answer questions while I underwrite. It's just a little confusing sometimes, as you can imagine, because I don't have all the deal info at this time. Yes, so Ronnie, yep, you win. You're a winner. Whoever wins, you get access to those communities for sure. This is when you'll start getting those rewards, that access. Like starting October 1st till the October, November, December. Yeah, for the first 3 months of the till the end of the year. Excellent. All right, Edgar, what do you got for me? You guys can all see my screen, is that correct?
Yeah, we see your screen.
Okay, excellent. So you give me info. You want to go property description? You want to do this? You want to give me the address and all that?
Yeah, that'd be fine.
Okay, go for it.
It's 628
Okay.
Gleaner.
Oh, I made a cardinal sin. Okay, so this is why I don't allow you guys to do this. What it looks like for you all, when you use a copy of the paid calculator, this is what it looks like for you. Right? This is the screen you see. All you do is click make a copy. Right? Because the problem is when you do it the other way, everyone accidentally edits the original.
Right.
So you click make a copy,
Right.
it automatically creates a copy. What you're going to do is you're going to go file, right? The very first thing every time. File, you're going to move it. And for me, it's under practice underwriting. You organize it wherever you want in your Google Drive, right? Because it makes a copy in your Google Drive. For me, it goes into my practice underwriting. And then we call it, I'll just say Edgar, and that's it. All right, so now we're working on the copy. You never work on the original, only the copy. Same with me. Otherwise, everyone's going to see that change, and you don't want that. So what's the address again?
628
628.
Gleaner Way.
Okay.
Yep, and it's Locust Grove, Georgia.
Yep, that's it.
Oh, there. Pull it up real quick.
Can you do me a solid and just copy paste everything into the meeting chat?
Yep, I can do that.
Okay, because otherwise we're going to spend half the time, I think, going back and forth. So the first thing I could do right now is look up the property. That's the first thing you should always do. And you want one in the maps and you want one on Zillow, Redfin, something like that. And I'll explain why, depending on the strategy, you want to be able to grab comps easily. When you have the maps and Zillow, it's the easiest way to do it. And once again, comps, comparables, you're going to use comparable properties that have sold recently to understand what the value of this property is, to understand, are you buying this property at value, above value? You know, are you overpaying? Are you're getting a deal, a discount, underpaying? And rental comps too, to see what it would rent for. So let's open up the property. So the first thing I do is I take this, this is what I do every time, so it makes my life easier. You copy that. We got the address. What was the Locust Grove, Gleaner 30248. So we go 30248. I spelled Gleaner wrong, which is fine. I mean, this doesn't matter, right? It's at the end of the day, it doesn't really matter. And then I paste that in here. So then anytime I need to, I could go to that Zillow listing very quickly. And this is a 4-bed, 2.5 bath, 2,500 square foot for 2.5, 2,500. And then, and then what we're going to do is I'm going to quickly look at the description. 351. Okay. Looks like they tried to sell it and couldn't, is what I'm going to take away from it. 614. Oh, so this, it says off market, but it obviously is still on market. Or maybe it is off, but I don't know. We'll have to get info later. So looking at the price history, they listed it for 360. So they tried renting it. Usually a listing removed in a short time frame means that they did rent it. Looks like that person might have moved out and then they tried selling it. I don't know why. So I guess they might have moved out sometime at the end of April or whatever, and they decided they want to sell it instead. They've only dropped it 5K in 1 month, and they haven't dropped it since. It looks like it was removed, so maybe it's just not going to work. Part of that being that they bought it. Let's see. So pending sale, listed for sale. Oh no, so they've been trying for a while. They were listing it for sale. They said, screw it, I'm going to rent it instead. And we'll try to sell it again in the future at a higher price. Pending sale, price change 338, 345. So it's all very in a short time frame, 355, 360. Oh, so they've really been trying to sell it with no luck since 2023. So really they've been trying to sell it since 2023 at 379. Dropped it all the way from May 2023 to June 2024 to 355. So they know these prices are unrealistic. What we don't know is what they bought it for, what their debt looks like and all that, but that is in the chat right now. They temporarily rented it and then they tried selling it again. Because summer is a good time to sell properties. Ideally, that's the best time. There's the most active buyers because kids are out of school, parents have more freedom. Like there's more flexibility that they can move around. Okay. All right. Okay. So let's see the notes. I'm going to read the notes out loud and then we're going to start putting it into the property address, close of escrow, 30 September 2024. So you have, 19 days to get all your due diligence done, raise all your money. If you're raising money, get everything done and then close on the property September 30th, 2024, which is fairly typical for a creative finance deal. Entry fee is $43,200. That's what they're presenting as the entry fee, which accounts for the cash to seller, realtor fee, and assignment to the wholesaler. Plus there will be additional closing costs, transaction coordination cost. The PITI principal interest on the loan and the tax and insurance are $1,588.21. Taxes offset will increase next year. Okay, so your taxes will be going up. New tax estimate $405 a month, 2023 and 2024 tax statement and drive. Oh, is that? No, it's maps. That's not I thought it would open up the drive. They estimate the PITI at 1993. Okay, that's good that they did that. Rent cost. So they're estimating as a $2,130 per month in this area for a long-term rental. We'll verify that. And then they say an HOA is $850 for the year with no annual restrictions, which I'm not a huge fan of HOAs because they can restrict your ability to be able to rent a property out using a certain strategy like short-term rental, mid-term rental. They may say no allowing rents under 6 months or no allowing, we do rent by the room sometimes and it's no allowing people like 3 people of different families in one house, or they say like, little things like that. Even though they say no rental restrictions, you need to read the bylaws of the HOA to verify that and understand that at any point an HOA can vote to change their bylaws and change what they're willing to and not willing to allow. So with all that being said, let's get into it. We'll get into the deal analysis to the best of our ability. So what I'm going to do is I'm going to take this address and we're going to go on PropStream, as I mentioned. And we're gonna look this property up and we're gonna get some of the debt information through there that wasn't provided. What the heck? Oh, it's probably this way. Yep, there it is. Sometimes you gotta just make sure because it's like a robot. It's looking for certain things. You gotta make sure it's typed in such a way and you gotta mess with it sometimes. Sometimes you get rid of a few things. Sometimes the way it's shortcutted. All right, so what we're gonna start with is mortgage and transaction history. And it shows that they bought it in 2021, December 7th, 2021. For 345,900. So this doesn't have all the information that it sometimes does, where it shows you like the loan information, right? What the loan amount was, not the purchase amount, but what the loan amount was, what the interest rate is, all that kind of stuff. This shows nothing about that. So it's gonna be hard to underwrite the right way, but we can underwrite it the shortcut way. So the right way to underwrite using this calculator is to recreate the loan at the time of purchase. So you go to this section, the original sub 2 loan terms is the best way to do it because this feeds in to the amortization schedule, right? The amortization schedule or the debt payment schedule for the property. And you need all the info in here to make sure it's on track. And then you can really understand what's going towards principal, what's paid in interest. If you have a balloon in X number of years, how much do you owe, all that stuff. But if you don't have that, we can shortcut away from some of that stuff. So what we do have is we know is 345,000. Wait, what? So they bought it for 345,900. We don't know if that was the loan amount. We do know that was their purchase price. And I'm saying what, because what do they list it for? Even right now, it's listed at 355,000. That means if they were to sell it, they're going to lose money on this sale, which explains why they are selling it subject to its existing loan. Because if they sold it traditionally, by the time the buyer and agent commissions are paid out, closing costs are paid out, all that stuff, the seller is going to have to pay money to sell this house. If their loan is close to that amount, which it probably is, unless they put a decent down payment in, which I can't tell you based on the information that I have. Do you know how much debt is still remaining on the property? I mean, there's like a lot of this info is missing, like the debt information, like how much debt is still on the property.
No, they didn't
But
share that. They shared, let's see if I have any.
Because this doesn't necessarily say purchase price or, if there does say some cash to seller, is there any equity that's being financed? Anything like that would really help out. Because this is showing that they are, I would assume, is a low equity on market or were on market. And they're going to, if they sold traditionally, they would have to pay money to sell this property and they're going to sell it at a loss. So that's why creative might be a better solution for them, which is totally a great option for the buyer and the seller if it solves their problem the way that they want it to. Based on the information I have here, they bought it for 345,900. Really not a lot of other info. Usually there's a lot more info. It says they estimate the mortgage to be 326,800, but honestly, I can't estimate any of this stuff right now. Do you have anything, or are we just going to do a lot of estimating?
Michael, I'm looking at PropWire and it says the last recording date of the mortgage is 12/8/2021. It's a VA loan. The original amount of the mortgage.
VA loan.
Yeah, the original amount of the mortgage was 345,900. The loan term was 361 months, and the interest rate. You got it? The interest rate is 3.1%.
Okay, does it say anything about maturity date, payment?
Yes, it's 1/1/2052.
Okay. Perfect. So we'll do that after. Okay. We'll do PropWire next time. Thank you for that info. So let's get into it. We're going to recreate what their loan amount was. So their loan amount, because it's a VA loan, it means they were 100% financed. Typically, you can pay a down payment, but the VA loan allows you to do a 0% down payment and even some of the closing costs can be rolled into the loan. We're gonna just assume that was the case. Really, it doesn't matter. So the original loan amount, let me zoom in for you all so you can see. So starting with the debt is the best way to go. But Edgar, I need you to figure out the purchase price, if there's any seller equity or if it's a straight sub-2 loan, okay? Especially
Okay.
what the loan amount currently is, but we can estimate that based on the amortization schedule. So we have 345, 900. Interest rate is 3.1%. Original loan terms, we said 360 months. You might have said 361, but it's going to be 360. And then the first payment date, so you take the maturity date, which is 1/1/2052, and it's a 30-year loan. You're just going to backdate that 30 years. So it's 1/1/2022. So this will auto calculate what the loan payment is. This is the principal and interest, which is a little weird because it says the tax and insurance, the PITI currently is 1588.21. I believe maybe in Georgia, they have a homestead exemption that's reducing their property tax payment. So probably the remainder is just their insurance alone, or a very discounted property tax amount too. So you said their PITI is originally is 1588.21. So if that's the case, the difference between 1588.21 minus the loan payment is 111.16, which is pretty much like insurance costs for a property. And then new PITI. So like the loan information always stays the same, but the taxes and insurance change over time. So we have 1993 is what they estimate, which is 1993 minus the monthly loan payment. They're estimating it'll go up to 515.95. I assume tax or insurance will be roughly the same, but taxes are the reason why it's going up, which is around 404.79. So we're going to underwrite it with the new changes because who cares what they're getting now? We need to know what we would be getting. So we have this, and we're going to go to that because we don't know what the current loan balance is. It doesn't matter because we have the amortization schedule automatically built out, right? So here it is. It auto updates to the date, right? It's one of the major values of this calculator. It auto updates the date. All this info is pulled in from what we just discussed. We don't even need to worry about the actual payment piece. It's just for you later. But the 1477.05 is what we just discussed. Terms, loan amount, interest rate, all that is here. Autofills the calculator. We know the monthly payment every month for the loan is 1477.05. In the beginning, the majority of that is interest and a smaller portion is principal. Shows on here the turning point for the loan when the monthly payment is more towards principal than interest, right? That's the turning point in the loan. That happens 8/1/2029 roughly, where the majority of your payments now going towards principal, not interest, which is an amazing part to be in when you own a property. That's why sub-2 is great, because sometimes you're starting further in someone else's journey, in the loan journey. So you're paying. So when they made their very first payment, 893 went to interest and 583 went to principal. You taking it over, let's say October 1st, 841 instead of 893 will go towards interest, and your principal is 635. So basically that $50 less you're paying towards interest, $50 more towards principal pay down of the debt, which is great. That's $100 swing from where they started out just 2 years later. And by the end of, let's say 5 years, it's 797 and 689. You see, it keeps getting closer, and that's what this chart is showing you. It keeps getting closer. The lower the interest rate, the sooner this turning point occurs. The higher interest rate, the later it occurs. When you come in, you're coming in somewhere in the middle or somewhere like a year or two. So you're already further along this journey. I highlight that because that's a huge value of real estate investing. It's not just the monthly cash flow, but the debt pay down. The less money you're wasting on interest, the more that goes to paying down the debt, the more you are adding to your net worth every single month. And actually, the more your tenant is paying to add to your net worth every single month. It's amazing. It's one of the most amazing parts of real estate. All right. So we know the loan amount that you would be taking over is 325,827 is what this is saying. So that is the loan amount that you're taking over, which is right here. Sub-2 loan taken over. We will put that in there. And then the money to the, we have they said the entry fee is 43,000. So they say 43,200 cash to seller. agent, and assignment. So because they didn't break it down, we're going to make assumptions. And the purchase price should only be the payment to the seller plus the sub-2 loan you're taking over plus the seller finance loan. Okay. So if there's no seller finance loan, that means this number needs to get to 0, which means we're going to need a purchase price plus down payment that basically is the same as that. So yeah, it combines it all to 0. So let's see. The purchase price, we'll do the after. Let's assume a $10,000 wholesaler assignment fee. So that 43.2 is now 33.2. And let's assume the agent is getting, who cares? Because it's all just entry costs. Like it doesn't matter specifically where it's going, but we'll just say the agent is also getting $10,000. We're not going to give them a percent. We're just going to say they're also getting that. So then we will say, so now that's, right? So it's the equals this 43.2 minus 10K minus 10K. That leaves us with 23,200. So the down payment to the seller or the cash to seller will be 23,200. We don't know if this is true, but we do know
Sure.
cash to seller, agent commission, and the assignment fee collectively equal 43.2. We're just breaking it up until we get more info, but the numbers will still be the same either way. All right, so that means we need to get this value to 0 because it doesn't look like there's any seller finance info, which means it's a straight sub-2. The purchase price minus the down payment should be equal to what the loan amount is that we're taking over. So all you need to do is if the loan amount is 325, 828, you just do 325, 828 plus 23,200. And you see we negated that 0. So it's the down payment sub-2 loan on a straight sub-2 deal is the purchase price, right? We just reverse engineered, we backed into that. We still accounted for the 10,000 here and there. I'm going to get rid of everything else here for the most part. So I'm not going to get rid of the admin or reimbursement costs. For me, that includes transaction coordination, LLC formation, inspection. That's a fairly conservative estimation for a transaction coordinator in the creative finance space to do your due diligence and transaction coordination till closing, and then post-closing where they handle, replacing the insurance or setting up utilities and all that stuff. The average cost is right around $2,400, $500 for your inspection, $500 to set up your LLC and all that. You could be a little cheaper plus or minus, but it's not going to drastically change. If you're the buyer, you want to know this stuff. We estimated the agent commission. The closing costs, we're going to estimate at 2%. It's kind of rule of thumb. Could be a little higher, a little lower. You're going to need to know that by understanding your market better, understanding the title companies that you're working with to know what that does and doesn't include. We'll just estimate 2%, especially if you don't have an agent. It's not going to be much more than that at all. And we have 3 months of carrying costs, but for right now, which are just reserves you're building in for it. For right now, we'll say $0. If you're funding the deal and you have reserves set aside separately, if you're raising capital, you want to make sure to raise the reserves too, because it's going to take time to get your property operational. But if you're just funding it yourself, as long as you know you have the money on the side, you don't need to account for it as part of your deal analysis. So we've got the entry cost now, the bare bones entry cost. We have no money for rehab or furnishings. We have no money for reserves, right? We have the debt information, the seller finance doesn't matter, right? You only see the monthly payment here. We have the sub-2 loan payment. We have taxes and insurance. What we did was we estimated the insurance based on the PITI minus the principal and interest and just assumed all of that's going towards insurance costs. So this is annualized. You fill in the purple bubbles. So just do 111.16 times 12. It'll automatically divide that by 12, right? To get you the monthly, right? If you wanted to put the monthly here, then you just change this to multiply by 12. You would have to edit the code, but if you just go 12 times the monthly, you'll get it here and it'll automatically give you the insurance. And then the property taxes, we said 515.95. We don't have time at this point to go into it in detail to get the exact taxes and estimate what it would be and all that. But for the sake of determining if this is a deal or not, based on the information we provided is kind of where we're going to go to. A lot of that happens when we do our deep underwriting session or the consultations and things like that, or in the paid community, we'd have time to go really deep into that, get insurance quotes, get these things. But for the time being, we're going to work with what we have. And there's tools that I've linked in the paid calculator, and I believe the free calculator, for you to at least be able to better estimate what insurance would be, taxes would be for that property in that market. And are you planning on, well, they provided it as a long-term rental. So let's put the long-term rental income they have. If we have time, we can get long-term rental comps. So they say $2,130 a month. So market rent, $2,130. We're going to just say that's the pro forma rent too, because we don't know what it could get to. Market rent is basically what is it currently renting for, and it's as is condition. Pro forma is if you do some renovations or maybe it's under market value, what could it get to for your business plan? But when you're buying, you don't really want to buy for the pro forma rent. You want to buy for what it's currently, if you make extra money on the back end after you improve the property, increase rent, then that's your benefit. You shouldn't overpay for property because of potential benefit in the future. So you have the total income. We have the sub-2 loan, taxes and insurance. The taxes are adjusted to what they will be. Because it's a long-term rental. Oh, wait, there's an HOA. So it was $850 annually. So we'll put equals 850 divided by 12. Once again, it's a little clunky. Why is this 0? Oh, the code's a little broken. I'll fix that. All right. So it's the 850 times 12. Or the 850 divided by 12 is $71 a month. Even if you're paying it quarterly, annually, whatever you want to know it from, because you're underwriting on a monthly basis. I assume you'd use property management. Well, let's underwrite it conservatively first, right? Because you may not want to use property management up front. You may self-manage to save money, but you want to know, can I offload this property to a property manager and still make it be financially viable? And the rule of thumb for long-term rentals is around 10%. The vacancy is around 8%, which is 1 month of the year. The property will be vacant. Maybe every 2 years it'll be vacant for a little bit, but that also is the money you're going to use to like turn over the property if you need to improve little things. We have your maintenance and capital expenditures at 10%, so 5% for like maintenance, which is, you need to send a plumber out to fix a clogged sink or replace smoke detectors or whatever, little like maintenance things to keep the property operational. Where capital expenditures are reserves you're setting aside for your big expenses. Eventually, you have to replace your appliances, your roof, your flooring, all those kinds of things. You want to build up for that. And if you don't account for that, you're going to think you're making all this money. Then you have to throw in $20,000 for some repairs. It just ate away all the money you thought you made over the last 3 to 5 years or whatever. So based off this alone, your rent is $2,130. Even your expenses, your sub-2 loan, taxes, insurance, and HOA are already making you negative or just barely $0. Actually, you're losing money, right? It's $2,175 a month and your market rent is $2,130, right? If you were to, and then you account for your property management or actually, I think that includes your property management. Nope, doesn't even include your property management. So when you account for your property management, your vacancy, your maintenance and CapEx, you're massively negative. And that's what this is showing you. We've selected this as a long-term rental. Right? So here's the analysis. As a long-term rental, your income is $2,130. Your expenses are $2,175. You're paying $213 a month to a property manager. And you're setting aside $383 a month in reserves for vacancy, maintenance, and capital expenditures, or 18% of the total rental income. That monthly cash flow with all your reserves accounted for is you're losing $641 a month. And you're paying at minimum $53,581 up front to then lose $641 a month. Obviously, that's not a deal. And nothing you can do really to make that a deal, because when it's a subject to deal, there's really nothing you can really negotiate, because the only thing you can negotiate, well, that's not true. You can't increase your cash flow, right? Because you can't change the loan amount you're taking over. You can't change the interest rate on the loan amount. You can't change the monthly payments on the loan amount. All that is fixed. If there was a seller finance component and that was why you were not able to get the returns that you wanted to, you can negotiate that. But all you can negotiate here is dropping the down payment to 0. If you were to do that, the best way to do that is to drop the purchase price to the same amount as the loan amount. So let's just see what it would look like. Let's look through the analysis real fast and we'll see what it would look like at the perfect case scenario, the cheapest you can buy the sub-2 deal, but why it still doesn't make sense. Because if your cash on cash return, which is the most important metric, telling you how much money you're making for the amount of money you invested, one of the most important metrics for cash flow buy and hold investors is negative. You're never going to have, it doesn't matter how low your entry cost, you're never going to have it be positive. What you can do then is purchase it and rent it on another strategy. Like we do short-term rentals, rent by the room, mid-term rentals. But if you're a more conservative investor, you may not want to do that. And you definitely don't want to overpay for a property. You don't want to give a wholesaler $10,000 for that, an agent $10,000, the seller $23,000 for a property you have to get overly creative on just to make some money. Unless it's going to make you a ton of money using that strategy. I don't know anything about Locust Grove, but I'm gonna tell you right now, I'm gonna assume rent by the room is non-viable because you want to only do those, in my opinion, in major markets. Here's Atlanta. All of mine are within 10 minutes of downtown Atlanta. We have one here. We have one right near the airport, which is great because the airport. We have another one here. We have properties around Atlanta that we do rent by the room, short-term rental, midterm rental. I wouldn't do that unless you are a market expert and you know and you want to take that
Yeah.
risk. I wouldn't do that really far away. I wouldn't do that for short term, for midterm, for whatever, for anything that's far out of a major city. I'm willing to take more risk to increase my cash flow through another management strategy if it's a more proven market where I'm almost guaranteed those returns. And these are the markets that appreciate better than all the other ones, right? The primary market appreciates better than the secondary or tertiary markets that are much further away. So I'm banking on higher rent income, more stable from a more creative strategy like rent by the room or whatever, because it's a major market. I know I'll get more appreciation than if it was a smaller market. I know that there's more economic drivers to the major city, the primary market, than other ones. So I'm willing to do that for properties in great locations or great properties in great markets, right? It doesn't have to be in Atlanta, right? We have one in Clarksville, Tennessee, right? 200,000 population. We have some in submarkets in Florida, but like hundreds of thousands of people that live there. And there's no shortage of people that are looking for maybe discounted rent to rent by the room to live there. You don't want a property that, no matter how big it is or whatever. I mean, actually, I can't tell you. It's your choice based on the information, if that makes sense for you in your buy box. It would not for me, ever. So that's what I can say. Let's see. I do own in smaller markets. Like I have 24 rentals from my time in Alaska, still in Alaska. Fairbanks, Alaska population is very low in the grand scheme of things. 32,000. However, the population's low, but it's a very transient community. There are a lot of people there for the military, huge military, 2 military bases, Air Force and Army. We have huge universities there, or a big university, right? Healthcare is very big, both on the military bases and off. And I rent those properties out as long-term rentals because my 20 rental cabins make over $3,000 a month as long-term rentals, like collectively. And my 4-unit that I operate as a midterm rental and short-term rental, depending on seasonality, makes over $2,000 a month conservatively. So like, that's why I would do that, right? I would take that extra risk, but it's also the market I started in and I knew and have a lot of people there. And I was really only focused on cash flow. And I bought them as great long-term rentals that now sometimes make sense as short and midterm rentals as well. Just to put that caveat, it's ultimately up to you and your journey, what makes sense for you. I can't define your buy box. I can just tell you what worked really well for me. And this is how this one market is how I was able to be financially free. 3 acquisitions, a 2-unit, a 4-unit, and then my 20 rental cabins, all with little to no money down, was how I was able to basically, with little to no money, buy 26 rentals that generated over $6,000 a month in cash flow for me. In less than 2 years, right? It worked really well for me at the time. You have to determine if that is what you're looking to do. I personally wouldn't do it for a property like this unless there's some reason why you think this would be phenomenal. But that's not the point of underwriting. 95+% of the deals we're going to look at together always are not going to make sense. They're not good investments. And that's the first thing you need to understand. Don't buy bad properties to rent them out and waste money on a bad investment. You're better off doing nothing than buying a bad investment. Don't let anyone trick you into saying, no, you got to just do it. Don't do it. No one's going to force you to do it. Instead, lend to someone like me who will get you guaranteed returns. Lend to other people. Do these other things with your money. Put it in the stock market for 10% growth over a long enough period of time with tax benefits as well. Do something like that. Don't invest a bunch of money into a risky asset that's going to lose you money. That's my advice. Not you, Edgar, in general. Anyone can do whatever they want. I'm not your dad. I don't care. But I'm telling you now, I would never put money in to lose money in an investment, right? That's kind of the easiest way to articulate it. All right, nice tangent. So $641, even if we did not account for reserves, our cash flow would be minus $258 a month. So either way, it's negative. Even if we drop the entry cost to literally $0, it still won't make sense. Well, okay, let's put $1 because otherwise it won't work. Well, actually, when it's negative and it's a lower amount, the percentage loss looks higher when it's not genuine. It's just because it's negative. It just a bigger, it's the same negative number divided by a very small number, which blows up the number there. That's why, like, if it's negative cash flowing, it doesn't matter what your entry costs are. You will always lose money unless you could change and increase that cash flow. So we can go through the scenario and say, okay, we'll say drop this price by the 23,200. So it's a straight sub 2 deal. All right, so that's zero, straight sub 2 deal, zero agent commission, zero wholesaler fee. You're just paying the closing costs and the admin reimbursements. It doesn't matter because if you're not profitable on a monthly basis, it doesn't matter what you divide it by, the cash on cash return will always be negative, right? That could matter if another strategy would work, but I can tell you without even analyzing it, I'm not going to rent by the room in a market like, let's see. All right, a lot of typos. Holy shit. I'm not going to rent by the room in a market with 10,000 people. There's more than enough affordable housing options for people to get that $1,200 single bedroom home than pay me $1,000 a month to live in a room, right? Like, why would they do that? They would rather just rent the single bedroom house. There's usually more than enough inventory to rentals. That's another reason why Fairbank's really great, because there's not a huge amount of rentals to accommodate all the transient nature of people coming in and out all the time. I'm not going to short-term rent. Who wants to short-term rent an hour away from, and I don't know anything about this market. Like, I don't know the economic drivers, but I can't imagine a single reason why someone would want to short-term rent consistently and pay you a premium to be an hour away from downtown Atlanta. Like, I can't, and I don't know if there's healthcare and all that, but if you've got money, invest it in a better investment, in my opinion, because it's not that this is not the only deal, right? That's not you, Edgar, right? In general, your money can be used however you want to use it, right? You don't have to use it on an opportunity comes your way. Be abundant. There's so many opportunities out there. Your job is to filter through the 95% of crap to find the less than 5% that are good. And even though you might find the 5%, someone probably was faster than you, they're willing to pay more than you, whatever, you're not going to get all those opportunities. Save your money for the deals that make sense, or lend to people like me who will get you a higher return than you're going to get losing money on something like this. Either you want to be a private money lender at 12% interest rate, you want to be a private money partner that owns with us, gets 7% cash on cash return, gets a total return on investment over 15, even over 20%, and you get to stay in some of the properties. Do that with your money, right? I don't need you to be my lender. We have more than enough lenders. I'm saying don't invest money into a property, not an investment, into a property that's going to lose you money. Please. You're an adult, you do whatever you want, but please, my advice is don't do that. That will not help you towards financial freedom. That will literally detract you away from financial freedom. It's better to go flat than go down, right? Your financial freedom, go flat for a while before you go up. Don't go down. Please don't go down. That's why we focus on underwriting here. That's why we focus. So many people tell me, hey, I bought this investment. It was only $30,000, but now I'm losing money each month. I'm like, who cares what it was only? Now you're losing money on a property in a fringe market because you want to get in the game and you did it the wrong way by just buying without understanding what you're buying. Then you thought you'd figure it out. No, you figure out what you're going to do with the property. You're going to say, okay, this is going to be a great rent by the room. It's actually also a great short-term rental if it needs to be, if that's my backup plan. And even as a long-term rental, I might lose $100 a month, but that's okay because I know I'm going to make a lot more on the other one, or it might work as a long-term rental, whatever. Understand your first plan, second plan, third plan. What are you going to do with this investment once you buy it? It's too late once you've already bought it. It's a lot harder. And now you're paying a mortgage on a property that's losing you money each month. Please don't do that. Please. All right. With all that being said, I'm not going to go into the other analysis because there's no point of looking it up. I don't even think there's data for pad split or anything like that. And there's nothing we can do here because we've already dropped it to the best sub 2 scenario you can. And obviously, because you can't change the cash flow, you can't make this a deal. Any questions about this deal or anything that we've talked about before we call it for the day?
No, well said. Thank you, Michael.
Of course. And
Appreciate it, man.
anytime you bring a deal to me, I'm not talking to the individual and saying anything negative or anything discouraging or disparaging to Edgar in this example or whoever. I'm talking to the general audience at large watching this. And I need people like Edgar and others to bring your deals that you want me to look at if they're real deals that you're considering buying, lending on. Otherwise, you're wasting this value. As I mentioned, people pay $500 an hour for this and they save. Imagine, for example, Edgar was going to buy this property as is. Let's just say, or let's say, you're not Edgar, let's say Romeo, I don't freaking know Romeo. Romeo was going to go buy the property at these terms, right? They spent $53,000 to buy this property, and now they're going to lose $500 a month. I think we somehow fudged the numbers here a little bit, but you're going to lose 500. There we go. You're going to lose $500 a month every single month. And all you had to do was pay for 1 hour consultation or a 30-minute consultation to learn, I should not waste that $55,000. I'm going to instead learn how to do all this and then make better investment decisions the next time. It's worth spending money to save money and make money, right? Don't waste money for the hell of it. If you're not taking advantage of the free resources, the free calculators, the free sessions, don't pay for stuff. I learned everything I learned without paying for anything. I was financially free without ever paying for anything outside of books, blogs, and all that. The advantage I provide to others now is I've done it very effectively. I'm an engineer. I'm very system oriented. We're organized. I've scaled to over almost $20 million in real estate. I'm condensing your journey to financial freedom if you take advantage of the things that I offer, free and paid. It's up to you ultimately what you're going to do with that info. But if you're not even doing the work on the free side, don't start paying for things. Save your money, learn. If you want to accelerate your journey or you want to take the next level and you're already maximizing the free stuff, then you pay, right? I signed up for my favorite mentorship, which I don't even know if I can call it a mentorship. It's a community, a mentorship, everything sub 2 with Pace Morby to accelerate my journey, right? I had $3 million of real estate. I was financially free. What that allowed me to do is raise capital, become a specialist in creative financing, be an integral part of the community that we have there, and then buy $15+ million of real estate, right? That's when you pay. You take advantage, learn, execute, but don't execute on bad deals. If you have $50,000, spend $500 to learn if you should invest or not, or take advantage of these free Zooms. Or moving forward, you can take advantage of the intentional investor community. And if you're really looking to scale your business and you need direct mentorship to become a master deal analyzer and negotiator, you want to be really effective at building your like lead generation system for bringing in deals to you, and you want access to like exclusive deals and investment opportunities. You want access to the creative finance calculator and analyzing how much capital to raise and what the terms look like and developing your marketing material and sending it out systematically through your CRM and all that. That's what the veteran investor is for. That's the highest level that I can offer at this time. That's what veteran investors are for. It's very much hand-holding and doing it together to scale your business. Intentional investor is going to be great for the majority of people who want access to all the info and want to do it themselves before maybe doing the veteran investor makes sense. For a lot of people, wealth through real estate is the perfect community for where you're at right now. Don't pay, learn, take advantage of everything I have to offer. I've literally done it, and I want to help you do the same. I genuinely do. Anything from anyone before we call it.
Michael, I may have missed this. So the veteran investor that takes care of capital raising, underwriting and everything from nuts to bolts.
Yeah, so everything. So from building your lead generation system, how you get deals consistently coming into your business, how you're going to analyze them masterfully for every acquisition and disposition strategy that involves buy and hold. We're not going to talk wraps or lease options. We can as a backup option, but it's not the primary thing I do, because when I buy real estate, I'm holding it and I'm renting it out and I'm making money each month and getting the long-term benefits of real estate investing. I'm not buying to then immediately sell to someone else like a wrap or lease option exit, but all the acquisition, cash, traditional, fix and flip if that's your goal, and all the creative strategies to acquire a property, all the different ways to manage properties the way that I do, and like analyzing and underwriting those deals, then it's taking all that information, right? You have deals and analysis, your system, we're building your system together. Then it's, okay, determining how much capital to be raised on an investment, what you need to account for as a true buyer that wants to scale. All the lesson learned, all the tools, the systems, everything that I have, you get in that. And then creating your marketing material for your investments that you're going to raise capital on, helping you send those capital investment opportunities, even helping bring the funding to your deals if you need assistance doing that, helping you raise the capital for your deals, joint venturing with you or partnering with you on your first few if you need me to establish your credibility and to provide support, and getting everything through due diligence all the way to the finish line. So you are buying properties infinitely based on raising capital to buy those investments. Hopefully that makes sense. I'm helping you recreate my exact buy and hold business model that allowed me to get $20+ million of real estate very effectively, essentially, with all
And
my
you said
lessons learned and tools.
the first one starts next week?
Yeah, September 16th. I'm a very transparent guy. I know a lot of people like to hide stuff. I don't care. So the price for the veteran investor is $25,000, right? To build this 6-week intensive mentorship together where we're building your business. And the guarantee I am providing you is you will raise more than $25,000 within 12 months to buy and hold real estate. If you don't, but you have put in, so everything after that is infinite returns, right? You're paying to learn and me help create all the material for you and help you raise capital. Once you get it going, you're going to be able to buy as many properties as your heart desires and that you feel fit your buy box by raising the capital to do so. If you do all the consistent actions you need to for a whole year and you do not freaking raise capital for an investment, I will just give you $25,000 of ownership into one of my investments. That's literally the guarantee because I know how successful everyone will be. And if I can't help you do that, then you deserve $25,000 of one of my investments.
Okay.
And price will go up. So this is what I'm saying now. If I deem that it's more work than it's worth this quarter, it will go up in the future. If you want to work on a small, like a payment plan or something, this first go around, I'm flexible, but in the future, it's going to be very direct. Like this is the cost, this is the value, here's everything built out. That's what that's going to be. And I'm not encouraging anyone to do it. We already have everyone there. If you want to be on the wait list in case anyone drops, change their mind, waits till later, let me know. And I'll at least have the discussion with you and see if you're a right fit for it. Because really, I want to help people scale their portfolios, not really just start investing for the first time ever, ideally. And I want to help people raise the capital to scale their business, not just the number of deals they have, but the way they're able to acquire those deals.
Okay.
Excellent. Any more questions from anyone about anything? Especially the deal analysis side. I think you've all hopefully become masters at straight sub-2 deals and why they kind of suck sometimes. Because if it doesn't cash flow, there's not a lot you can do besides try to increase the rental income by doing different type of management strategies. But most locations and properties don't make sense for that, especially with an HOA. That's like another thing we didn't talk about, especially with an HOA that can change everything for you. All right, y'all, we're gonna call it. That's it. This recording will be in the school community. Remember, you have to unlock this level 6. All of these things will be fully accessible to the intentional investor community, and they'll have exclusive Zooms. So if you want to start that, that's October 1st is the intentional investor community opens up. The price up until October 1st is $200 for every 10 people that we add. It goes up until we cap at a certain amount because I do not want a community. I don't want to tell people I'm going to help them and there's just too many people to help. So it's going to be limited. I don't know the amount yet, but until it becomes that we cannot provide the value that I need to for everyone involved. So that will be happening October 1st. The veteran investor starts next Monday, the 16th. If you have any questions or want to be part of any of it, just let me know. Reach out. Bye, y'all.
Awesome. Appreciate it, Mike.
Thanks, Michael.
Can y'all stay for 1 second? I'm gonna take a